Hey everyone, today we're diving into the ring with two heavyweights in the world of assets. Bitcoin versus gold. In one corner we've got the digital disruptor, Bitcoin, shaking things up with its decentralized and revolutionary tech. And in the other corner we've got the OG precious metal, gold, with a legacy of value spanning thousands of years. We're gonna break down each of these assets, blow by blow, looking at their key traits, their strengths, and their weaknesses. From how they're mined, to how they're stored, to how they react during a crisis, we're covering it all. So, whether you're a seasoned investor or just starting to build your portfolio, this matchup is for you. Let's see how these two stack up in today's world. First up, let's understand what we're dealing with. Bitcoin, minted in the digital world, is a cryptocurrency. It exists as lines of code, secured by cryptography, living on a decentralized network called the blockchain. No central bank, no government, no institution controls it. Gold, on the other hand, is about as old school as it gets. This tangible asset is a precious metal, mined from the earth, and valued for its rarity, beauty, and resistance to corrosion. It's been a store of value for millennia. Now, scarcity plays a huge role in an asset's value. Bitcoin is designed with a hard cap. Only 21 million Bitcoins will ever exist. This limited supply is written into its code, and it's one of the reasons why people are so bullish on its long-term potential. Gold, while finite, doesn't have that same hard cap. Sure, it's a scarce resource, but miners are constantly digging up new gold, adding to the existing supply. This makes its supply more flexible, which can impact its price differently than Bitcoin. Both Bitcoin and gold are often touted as hedges against inflation. The idea is that as fiat currencies lose purchasing power, these assets hold their value, or even appreciate. Gold has a proven track record, shining bright during periods of economic uncertainty when people flock to its safe haven status. Bitcoin, however, is still the new kid on the block. While its limited supply and decentralized nature have some convinced it's the ultimate inflation hedge, its short history means we haven't seen it truly battle-tested through decades of economic cycles like gold. Let's talk storage. Bitcoin, being entirely digital, is stored in digital wallets, either online, offline, or even on hardware devices. This requires a bit of tech savviness, but it also means you can potentially store vast amounts of wealth securely on a device smaller than your phone. Gold, with all its physicality, requires a different approach. We're talking safe deposit boxes, home safes, or even professional vaults if you've got a serious stash. This can be costly and less convenient, especially if you're dealing with large quantities. When it comes to portability, Bitcoin takes the crown. Being digital, you can transfer millions, even billions of dollars worth of Bitcoin anywhere in the world with an internet connection. It's fast, it's borderless, and it can be done with a few taps on your phone. Gold? Not so much. Its physical weight and the security concerns that come with transporting large amounts make it significantly less portable. Imagine trying to catch a flight with a suitcase full of gold bars. Now let's talk about the elephant in the room when it comes to Bitcoin volatility. Bitcoin's price is known to swing wildly, sometimes by thousands of dollars in a single day. This can be exhilarating for risk takers, but terrifying for the risk-averse. Gold, on the other hand, is known for its relative stability. While its price fluctuates, the swings are typically far less dramatic than Bitcoin's. This makes it a popular choice for those seeking a more stable asset to park their wealth. Gold has a history spanning thousands of years. It's been used as a form of currency, jewelry, and a store of value since ancient civilizations. This long track record gives investors a certain level of confidence and familiarity. Bitcoin, on the other hand, was born in 2009. It's the new kid on the block, and while it's gained significant traction, it's still in its relative infancy. This lack of a long-term track record makes some investors hesitant. One of Bitcoin's biggest selling points is its decentralized nature. No single entity controls it, not even governments. This makes it resistant to government interference and censorship, something that appeals to many investors, especially in politically unstable regions. Gold, however, can be subject to government regulation and even confiscation. We've seen this happen throughout history, where governments have seized gold holdings from citizens. Bitcoin transactions are recorded on the blockchain, a public distributed ledger. Every transaction, every movement of Bitcoin is trackable and transparent. This level of transparency can increase accountability and reduce the risk of fraud. Gold markets, however, can be more opaque. While there are efforts to increase transparency, the trading and ownership of gold can be more centralized and less transparent than Bitcoin. How do these assets perform during a crisis? In a digital world facing cyber attacks, internet shutdowns, or financial system failures, Bitcoin's decentralized and digital nature could make it a valuable tool for transferring and protecting wealth. Gold, however, has been the go-to safe haven asset during wars, hyperinflation, and economic collapses for centuries. Its physical nature, its historical significance, and its universal value make it a tangible asset people trust. So, there you have it. Bitcoin, the digital gold, offers high risk, high reward, and the potential to revolutionize finance. Gold, the stability insurance, provides a proven track record, a hedge against uncertainty, and a sense of security that transcends generations. Ultimately, the best choice for your portfolio depends on your individual risk tolerance, investment goals, and beliefs about the future of finance. A diversified portfolio might include both, gold for its stability, and Bitcoin for its potential upside. Which one would you choose for your portfolio? Let me know in the comments below. Don't forget to like, subscribe, and hit that notification bell for more in-depth comparisons and financial insights.